Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions and expertise on all things trading. Grab a coffee, pull up a chair and join the Trader Coffee Break.
Well. Welcome to the Trader Coffee Break. I hope you had a lovely week so far. My name is Jason Graystone.
And I am Akil Stokes.
And we're back again for another rant, another rave away from the charts. Lots of great feedback about last week, so glad to see people are enjoying the show. We've hit about 1,350 subscribers, something like that. So it's obviously reaching more and more people, but with your help, we can reach more. So if you're getting value from these, please share. And we'll carry on the discussion. This week, we're going to be talking about which currency pairs, how to choose, more specifically, how to choose which currency pairs to trade, or how to select a portfolio. And where do we begin? It all starts with testing, I guess.
Yeah, I guess it begins with, because one of the most common questions we get is, what's the most profitable Forex pair or, asset class under, and I think one of the biggest misconceptions that traders have is that there is one that is more profitable than others. And that, it's so much more complicated than that. If it were that easy, there'd be a lot more successful traders. But I would start with saying this. I think, we'll get into kind of testing and whatnot, but I think it's important to understand that there's a difference between popularity and profitability. For example, by far, the most popular pair out there is going to be the euro dollar. That is by leaps and bounds the most popular pair. However, don't assume that it's the most profitable pair. And I give that warning because as traders go through like the testing process, that's typically the one everyone starts with because it's it's the biggest one that's in our head. And maybe you test it and maybe you realize that your system or strategy doesn't work well in that pair. And I've seen so many traders, including myself, assume that, oh man, if it doesn't work on the big boy, it can't possibly work anywhere else. And I go ahead and trash the system and try something new. And you just don't want to be in a rush to throw away something because it didn't work on one pair. It could be the most profitable strategy ever on a million other pairs. It just didn't particularly work on that one because that pair has its own personality. And, one of the quotes I always remember from you, Jason, I'd love if you kind of follow up on that, is you said, treat your pairs like your employees, where all of your employees aren't the same, right? There are human beings. They each are motivated differently. They have different skill sets, different agendas, different speeds. I guess, what exactly do you mean when you say that?
Yeah, I came into trading from very much from a business standpoint, and the way that I saw these currency pairs or any instrument was a different personality. And when I thought about it, I thought, well, there's some pairs that behave better in the summer. There's some pairs that kind of like to have Christmas off. And there's some pairs that kind of slowly bleed you dry. And there's some pairs that don't work well with others. And it just became this kind of portfolio of employees. And in your business, in any other business, you have those employees where it's always the same one whose bus is late or their alarm clock doesn't go off, or, it's always the same ones who want to take all their holiday and ask for extra days off and all that kind of stuff. And when you look at it like that, you appreciate that actually it's not one's better than the other, but you just have to know what works best when. And it's all about the strategy, as Akil says. You can find something to be profitable on one pair that is not profitable on another pair, and vice versa. But you can also find pairs that work well together, so that when you're in a big drawdown, like let's just say, for instance, if you're a massive trend continuation or a trend following trader, chances are you're going to have a big period of drawdown because you're aggressively chasing those big follow-up runs. And when that starts to turn, you're going to have a big loss. But if you have another pair that works really well in counter moves or consolidation, that can sometimes keep you afloat or keep you out of the red whilst one's doing badly, the other's doing well. And although it might not perform well for most of the year, it actually counteracts one of your setups. So that's something to bear in mind as well. So it's not necessarily, you don't necessarily want all pairs that do well for long periods of time, because the chances are you're going to trade them together and one will perform better at different times of the year. So that's something that I've found as well. But when it does come down to picking pairs, as traders, we have to just make money when the market moves. So whatever strategy that you pick or choose to go and develop, really you want some movement there so that you can start practicing or testing or identifying these setups in the first place. If the market doesn't move, you can't actually make money. So that's the best place to start, I would say.
Yeah, I love what you said about the different employees. It always reminds me of like building a team, because that's essentially what we're doing, whether we're building an investment portfolio or building a portfolio of pairs. We're building a team around our strategy, and our job as a team is to win or make profit. And if you look at any team, there's a team in the NBA called the Phoenix Suns. And what they did was they invested in 3 like superstars, and they were trash. They just got knocked out the playoffs because they had 3 superstars, but they had nothing else. So those 3 superstars, when they were all on fire, it worked out great. When they weren't, there was nothing left for them.
Right.
On the other hand, you have other teams that build different pieces, right? You have a superstar here, but you have a guy that just plays good defense, or a guy that just rebounds, or like a savvy old veteran that keeps the young guys out of trouble and stops them from doing stupid stuff. But that team works better as a whole because they're well balanced. And, you know, with a trading portfolio, it's the same thing. You may have some pairs that are extremely profitable. They go on these big heaters, these big winning streaks, but then they also have these periods where they get real cold, and you know, the directional movement dries up and they're just taking loss after loss after loss. Well, if you have too many of those, you're going to have periods of really high highs, but also really low lows. And as an investor, as a trader, where, you know, great or good traders or great risk managers, that's not something you want. We don't really want those wild swings, right?
No.
So you want a pair that I call them steady Freddies. You want a pair that's like, it's not really impressive. You would never trade it like just by itself, but within that portfolio, when those aggressive pairs are going through their cold streaks, this one's just kind of turning on, doing its job, and it keeps your head above water until that next hot streak occurs. So, you know, it's important to look for that stuff. And when you go through the testing process of acquiring historical data, and, you know, play around with the different combinations. Don't just be like, I'm going to pick out my top 5, you know, profitable pairs and use them. You know, play around with risk reward, play around with win percentages, play around with how, hey, if I insert this one, how does that help me keep my head above water during the June drawdown, or you know, those stories will tell you a much bigger picture than just kind of looking at everything from the outside and looking for the most profitable one. So it's important to understand that.
And obviously you can trade just one pair, and you can trade multiple strategies on that one pair, so that you get to know the ins and outs of that market, and you can attack it depending on whatever situation it's in, because you've got something up your sleeve to attack that. You know the breathing pattern of that market so well that it's like, oh, I know it behaves like this when it's in this situation, and you can have a strategy for that. And I know it behaves like that in that situation, you have a strategy for that. We've got traders like Tony, he trades very few pairs, if more than one, and does well. He's been trading for years, but you can also trade one strategy on many pairs, you know? So think about it that way. You don't want, as Akil just said, you don't want to get to a place where you've got these big winners, because with big winners come big losers a lot of the time. It's not, it's best to go for the steady eddies, as Akil said, sustainable and boring, because they're the ones that still sometimes have big winners, but they don't have big winners a lot. They're just consistent winners. And if you think about business, it's always wise to develop a very repeatable week, a very repeatable product, like a subscription product that covers all the overheads in the business, because that subscription model is so sustainable. People don't cancel very often, right? And if that covers your living costs or your expenses, then anything on top of that is the cream, right? That's the big profit. That's when you can add those strategies in. That's when you do a big launch, or you do a new product sale, or you do these big swing trades, right, that really hit home, and that's all profit on top. And the reason that's important is because it doesn't affect your mindset. You know, you've got the bread and butter without thinking, can I eat this week? You know, yes, last week we bought the Ferrari, this week I can't afford to food shop. It's like you don't want to be in that situation, because that's very, very stressful, and that will affect your ability to trade well long term anyway. So bear that in mind for sure. I'm trying to think if there's anything to say about picking pairs. There are pairs that perform, like I'll share with you something that I've found. The dollar yen, if you're more of a breakout trader, you know, an aggressive type of trader where you're just looking to buy into a position that's going long already, or short a position that's going short already, the dollar yen's probably a very good pair for that. But just bear in mind, it's taken me years to, I'm right a lot on the dollar yen, but I've still got a love-hate relationship with it, because I'm still trying to refine rules on optimizing that. You know, you have to be very aggressive with the dollar yen, and I wouldn't say just go into that and trade it from the offset. It's a pair that you have to really get to know, and then really think about the rules behind it if you're going to catch it. But phenomenal pair if you can get it right, and I will get it right one day, and maybe one day that will be the only pair that I trade, because I've put so much work into it. But that's good for that. Other pairs like pound yen is really good for head and shoulders setups that I've found, and ascending channels and descending channels. Aussie pairs are great. Aussie CAD is great for ratio patterns. Really, really great for cipher patterns in particular. One of the best. So depending on what type of strategy resonates with you, you might want to take that on board to think about, you know, what kind of market you want to start with, at least, so that you can start getting the encouragement that you're finding lots of opportunities, lots of setups, because that's important as well. It is important to find opportunities. You don't want to trade like some very, very exotic pair with a massive spread that you get like one opportunity in a lifetime. You want lots of movement so you can get encouraged about, there's lots of opportunity here, and I can refine the rules around this to pick out the good ones from the bad ones. So major pairs, you know, start with major pairs, I would say, at least. What about you, Akil? Is that a fair comment?
Yeah, I would agree. I definitely stay away. I don't do any of like the small weird stuff with the million pip spreads. It could be attractive because there's just volatility, and like you hear about it every once in a while when it moves a million pips or ticks at a time. But that's only every once in a while when some natural disaster or some yen intervention comes up. Yeah. I would add this, and I think this is also a good thing to think about, is, you know, risk management with your pairs. Although I'm not a believer in trading based off correlations, meaning I would never trade the pound dollar off of something that's happening on the euro dollar, because I don't think there's any need for that in Forex, because each pair is its individual battle and you can judge them accordingly. But understand that there are major pairs. Let's take the yen, for example. And if major news is going to come out for the yen, let's say another round of intervention comes out, there's a likelihood that we're going to see yen pairs move across the board. So the dollar yen may move, but also the euro yen and maybe the pound yen, especially the smaller ones, Aussie yen, Canada yen, New Zealand yen. And there's a chance that they can all move in the same direction. And a mistake that I made early on in my trading career was, you know, I was trading, I was managing money, and I had about four yen pairs in my trading portfolio, because they all made profit, right? I had the triplets, I think I call them. I had the Canada yen, the Aussie yen, New Zealand yen, all in my portfolio because they all pretty much move exactly the same. So they all worked with my strategy. So being young and naive, I'm like, oh yeah, I got 3 pairs that are awesome. Let's, add them in. And I remember there was a natural disaster. I forgot what year, but I think it was like a tsunami or something that occurred.
Right.
And we just, long story short, I was on the opposite side of the tsunami or the reaction to it. And I lost on all 3 of those pairs at the same time. And it just wasn't like, it wasn't a drawdown because there were big losses. It wasn't a drawdown that was expected. And I lost more than I usually would, simply because I had too much exposure to a single currency pair. So I learned a lesson then that you have to have balance. So, it may be worth considering a rule where it's like, hey, I only have 2 or 3 of each of these crosses. I don't trade any more than 3 yen crosses or any more than 3. Usually the dollar crosses are kind of on their own, but maybe like, Canadian dollar crosses or whatever it may be. And you'll be able to look through your numbers and your back testing to see like, hey, is there any extra risk that I'm taking in by having this much exposure to a single currency at once? So that's something you definitely want to consider from a risk management perspective. Don't just look at, oh, I can make this much money at once, but how much can I lose at once if things go against me?
Yeah. And a great thing to do if you're doing that, correlation risk is great. If you're in £1 pair long, you don't go pound short on the pound Aussie or something. But a great thing to start doing is if you are in one, like make predictions and look at your setups, but only take the first one to play out, but note the other one. And then when you review that period of 3 months or whatever it might be, you can see how many played out in favor and how many you would have been right on, how much money you would have made if you'd traded both. And you can get a big sample size of that and then decide how much more aggression you tweak up the correlation risk. It's like, okay, well, I've actually left 2% on the table, so I'm going to be 0.5% more aggressive. So therefore, I'll add 1 more pair. I'll do I can be in 2 pairs at once out of my 10 or whatever that percentage is based on how big your portfolio is. I hope that makes sense. It's a really great thing to start doing as a trader because you start to feel more connected to the numbers and to to your performance. Really, really important thing to do. Definitely.
Yeah, I saw a question came through real quick. Says, what would be the best time to trade the dollar yen in the UK? And I think it's important to understand that you don't have to trade a base currency during its currency times. Yeah. You don't have to wake up during the Asia market. And if you want to trade yen pairs, right? The 2 main markets are going to be London and New York, right? That's where the bulk of the trading happens. And understand that London traders are trading more than, UK, European pairs, right? US traders are trading more than just dollar crosses. We're trading everything across the board. Everything kind of intertwines within itself. So you can easily see movement in yen pairs during a New York session, easily see movement in Kiwi pairs during the London Open. So you don't have to set your alarm clock and wake up at a certain time to trade a specific currency pair. The Forex market is 24 hours and the bulk of the action will happen between that the London Open and the New York close.
Yeah, definitely. The London to the New York crossover is kind of the busiest time for trading all those major pairs. You said the dollar yen, that would be included in that. What I will say about the Asia session though is that is the flattest. Like there's least activity in the Asia session. So in actual fact, it's probably best not to trade the yen in the Asia session. And in fact, there are certain news events that take place on the Aussie, like unemployment and interest rates, things like that. It's either 12 a.m. or 12 midnight or 2 a.m. in the morning. It's always that in the UK. And if I'm in a trade, I have to get up. And if I'm in a trade on that pair or the Aussie dollar, I have to get up and set an alarm to make sure that I can just go and check that or manage it. So that's a pain. That's a pain in the arse.
Yes.
so don't do that. I would advise that if you're stuck with the Asia session, try and get into the London or the because the chances are you can. If you're in Australia, you can trade the London session. If you're, probably struggle with the New York session, but you can try and trade the London session. The Asia session's flat, but that has nothing to do with pairs, as Akil said.
Yeah, I can't tell you how many times I'm like reading a book. Usually that Asian news or that Aussie news comes out like 7, 8 o'clock my time. Like putting our kids to bed and reading the book, and the eye starts going over. I'm like, so.
Yeah.
What like, Daddy? I'm like, wait a minute. We're unemployment. We're moving. Like, hold on 1 second. Daddy's got to go move a stop loss. But
because that'd be like, what would it be?
It's like usually 7 to 8 o'clock my time.
7 o'clock
when it comes to somewhere around.
Yeah.
Depending on stupid time
or 9
changes.
PM. Yeah.
Or not yet at 9 p.m. That's when where I'm like half awake, getting ready to go to bed. And I'm like, come on, man.
Yeah, and I'm asleep.
Yep.
Cool. Well, look, I hope that helps you answer your question about the pairs. I don't really have anything else other to say than that, but that's some good advice, I think. And if I wish I would have heard that advice, early on. So let us know if you've got any other questions, if you've got any other topics that you want us to discuss. We did get quite a few through today, and I posted a load into mine and Akil's little trader coffee break chat. So we've got plenty to talk about in future upcoming rants, but we always find that if there's one that comes up off the cuff, there always seems to be the best sessions. So please keep firing the ideas in. And Akil, anything else to add?
No, great session, great topic, great questions and involvement from the chat. I love it. Keep it up, guys. Keep supporting and keep sharing. That way we can bring more traders into the coffee break and we can have more great topics to discuss. That's how we keep this thing growing and keep giving you guys valuable stuff.
Amazing. Well, guys, thanks for joining us again. Good to see you here, Tony, as well, by the way. And do less to do more. And we'll see you next time. Take care.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.